What's up, guys? What's goody? Welcome to the channel and your Bitcoin update. My name is Bee, and I'll be your host on today's episode of Emoji Finance. As you know, I'm hosting all the way from sunny Australia. Today is our fifth video, and we've already had more price predictions than Harry Potter and Gandalf combined. In all seriousness, guys, it's only our fifth video, and we've had more accurate price predictions than some channels who have hundreds and thousands of videos. Some of these channels have 1.2 million subscribers and have yet to make an accurate prediction as accurate as Emoji Finance. This is your chance to get in early, be an early subscriber within the first 10 subscribers. All you have to do is go down and click subscribe. Even just give us a like. It's free. It's Tuesday. We've had a golden cross, and I'm excited about what's coming up for Bitcoin this week. Let's take a look at the charts. Alrighty, let's take a look at the daily chart. We'll whack on our trend lines and indicators. You should be familiar with these charts by now. We do not change our charts every 2 seconds to fit our narrative. This is exactly what we're seeing in the long-term trends and indicators, and this is the same patterns that we follow week in and week out. As you can see, we got our long-term bullish trend line. I've spoken about this plenty of times in the past. If and only if the price goes to this trend line, finds support on top, then it is likely that we'll see all-time highs in this cycle. If not, unfortunately, I don't believe that we will see all-time highs, but that is nothing to worry about. You can make money going up or down in Bitcoin and in traditional markets for that fact by trading. Learn to trade, guys. It will set you free. You don't need to be a hodler all your life. You can trade and make plenty of money. So that is our bullish trend line. Zee has also drawn in the ABC Elliott wave pattern, and he spoke about that in his last video. If you have not seen that video yet, make sure you go back and check it out. It is a banger of a vid. The ABC is based off the Elliott wave theory, and how we find those figures is based off my old friend Fibonacci. This is the golden pocket, which played out perfectly. And from that, we can now use our Fibonacci extension tool to get an indication of the bottom. This right here is my price target or price range for the bottom of wave C, and that is based off the Fibonacci extension. Now, does that mean that the price is going all the way down in a straight line? Absolutely not. Fibonacci and Elliott waves help us determine what happens from here on out. It is more likely to be a zigzag pattern all the way down to this target right here. So from here, Z showed us some price predictions yesterday in between 38 and 42, and I am in confluence with those price predictions. Once we hit that, we will likely see a bounce back up, and believe me, everyone will get super and ultra bullish, calling for all-time highs. You'll be able to tune into YouTube and see every single YouTuber calling for all-time highs when we have a little price correction. It happens every single time. And you refer yourself and all your friends over to Emoji Finance because we will be correct. We've been correct before. We will be correct again. That price will go up and test this downward trend line. Should be around 49, maybe 50, and then down again. it is very, very likely that we will be shorting that bounce. Sorry, I'm wrong. I will not be shorting. I'll be longing that bounce up. Now, to look at the RSI. This is my second favorite indicator after my old friend Fibonacci. As Z drew in, again, we do not change our charts. Z drew in these trend patterns in his video. Make sure to go back and check that out if you haven't seen that. It is likely that we see this RSI going to test this trend line, which again lines up with Z's price targets. Once this bounce off this trend line happens, if it holds up, that's when we will long and we will make dollars going up. You can make money going up or down. Just remember that. There's one more thing on the daily that I wanted to show you guys, and I'm going to remove all of those lines and indicators to show you another indicator called the bull market barrier. So just to confirm and be in confluence with my prediction of a bear market price of 16,000, I'm going to show you this bull market barrier. And as you can see, we've pumped up, formed all-time highs, and then dropped below this barrier. We then went up and tested the center line in the red. We've never, ever in a bull market formed an all-time high, dropped below, and retested and gone above this line. It's never happened in Bitcoin's history. It always goes back up, tests this line, and then drops back down. And that goes in confluence with going down all the way to 16,000. There will be bounces in between on the way to 16,000. That's just how Bitcoin works. There will be a bounce to get people super bullish, then down. Bounce to get people super bullish, then down. Every single time this happens. Let's take a look back at previous bull markets. 2018. I will try and zoom in here. Bear with me. All-time high, breaks past the barrier, goes back up and tests the barrier, down again. We never crossed this barrier on the retest. 2019. We don't even cross the barrier to begin with. We just test the barrier. Anyone else want to have a go at finding something bullish about this chart? We always form an all-time high, go down, retest it, but never cross it. Exactly the same thing's happening here. Okay, guys, let's take a look at the 4-hour. We've had a chance to look at the daily chart there for the macro view. This is my favorite chart and the chart I like to trade off. It's the 4-hour, and it can give us some indication of entry and exit points for upcoming trades. What we've seen is the large dump down here, and I called this price exactly. You can go back and check out my previous video. We're now forming this downward trending triangle. What's very, very important to note and to learn whilst trading is divergence. And how we look at divergence is we look at the price action and we look at the RSI. So whilst this is a downward trending triangle, that's quite difficult to say actually, downward trending triangle, that is a bear flag, as we've had a very big dump and then some consolidation. What's more important to note is that the price is decreasing, but the RSI is increasing. That is what is known as divergence and bearish divergence, in fact. Make sure you learn about the RSI, guys. It's a critical indicator for trading. If you give this video a like and you subscribe, drop a comment, I'll be sure to make more educational videos about RSI. RSI divergence is one of the most accurate tools in predicting upcoming price movements. So we have some very, very strong bearish divergence. That makes me quite confident that the price will see more downside action. So using this triangle, we're able to measure a position, and we take that opening of the mouth of the triangle, and depending on when and where we break this triangle, we can measure our price targets. If we break this in the next day or so, we will likely see a price of around $40,000 as our first measured move. If we were to break it later on in the week, what do we see here? We see a price target of around $39,000. Those measured moves are in confluence with Zee's previous price targets in his previous videos. Make sure you go back and check that out. On the flip side of that, we could break to the upside. And that, if we were to break out right now, would get us to a price of around $50,000. Whilst that is certainly possible, I believe there's more downside to go before we pump back up. Another really important thing to note is this RSI channel. The RSI at the moment is just poking above this channel. If that closes, if this 4-hour closes and this is poking above, be cautious of short positions. Wait for confirmation before you trade. There you have it, guys. That's all from me today. On a final closing point, everyone is talking about this golden cross. Golden cross uses moving averages and not exponential moving averages. EMAs are certainly my choice for moving indicators. And if you give us a like and a subscribe, I will give you the reasoning as to why EMAs are more accurate. In my opinion, I will certainly not be trading off the golden cross that everyone is talking about. Wait for those trade indicators to confirm your position. Remember to use good risk management, be kind to people, and have fun making money.